Good morning. In the papers today, British small business lending has remained sluggish and the construction sector has shrunk again, prompting a downbeat outlook for growth as the Bank of England began its two-day Monetary Policy Committee meeting. Striking falls in construction output were mostly responsible for the economy shrinking in late 2011 and early 2012 and threatened to push Britain back into recession. For the past couple of months, the MPC has been divided over which response to take, from either restarting purchases of government bonds or taking other measures. British taxpayers will have to pay £38.2 million as part of a deal struck by European lenders to rescue Cyprus as the troubled country's president warned of difficult days ahead and a new finance minister was sworn in. There will be a $10 billion rescue deal between Cyprus and the so-called Troika of the European Commission, European Central Bank and IMF, which would help to restore the health of the economy. The Bank of England predicts borrowing problems for small businesses. Banks reported that demand for credit among small and medium-sized firms had fallen over the quarter. The bank survey highlighted that lenders commented that confidence in the economic outlook remained fragile and that was weighing on demand. SMEs continue to be left out by lenders. In personal finance news, MPs argued that ministers should make the flat rate pension more generous to ensure people have an incentive to save for their old age. Under government plans, people will have to work for 35 years to qualify for the new state pension, but for their old age. But the current system of pension and benefits means that elderly people who have not worked will only be slightly worse off than those who have. George Osborne announced that the single-tier scheme is being brought forward by a year to 2016. The single-tier pension will affect around 40 million people of working age when it comes into force, and will run alongside the government's plans to enrol people automatically into workplace pensions in the coming years. The plans mean millions of workers may have to pay more tax to increase national insurance contributions if they are part of final salary occupational pension schemes. Insurer Prudential is buying more than 500 houses and flats to let in London and the south of England, in a calculated bet on years of good returns from generation rent. In a deal worth £105.4 million, the Pru's real estate management arm, PIN, is buying a portfolio of 534 private rental units from upmarket house builder Berkeley. This is the first time in a generation that a large institutional investor has dabbled in the UK's £840 billion rental market. It might signal a return to the pre-1945 era when insurance firms and other large funds had huge property portfolios. The British housing market reached a landmark this year, demonstrated by the fact for the first time since the 1960s, more people are living in privately rented accommodation than in social housing. Thank you.